What is going on, ladies and gentlemen? Welcome back to the channel. If it does not say live in the bottom right hand corner of your screen, unfortunately you are watching the recap. Go ahead, click back on the main channel and click on the live stream that is hopefully currently live, and we will see you there, baby. But I hope you guys enjoyed your weekend. What did we do over this weekend? Did we have any fun in the sun? It's been hotter than balls everywhere. So I hope y'all had some fun. Let's see. Brrr. Nasdaq slightly red. S&P slightly red. Get some people in here. What's tonight? Tonight's Sunday. Oh my gosh. Alex M. How are we doing, ladies and gentlemen? We got 7 of you in here. 7 people are ready to go and came to play, baby. But nobody wants to talk to me. Talk to me. What we do this weekend? Vlog. Good evening, Vlog. Yes. How is it going, brother? What happened this weekend? What's good, Dan the man? The man is in the building himself. Let's go, baby. Junior the truth. How are we feeling? Yeah, dude. This was like $13 at Walmart, not gonna lie with you. And I had to buy it. Even though I don't drink Budweiser, I had to. I just had to. They had a Bud Light seltzer too. I said, man, we don't play with the seltzers, so it didn't feel right. But we are back, baby. And the futures are recovering a little bit. Sun 16 tomorrow. Had a big party. Oh my gosh. There you go. That's a milestone for sure. They can stop hitching rides with you. Go get the license. Let's go, baby. It's time. Nasdaq down slightly. Oil down slightly. S&P down 0.15 and the Dow is down 0.20. Yes, the S&P and the Nasdaq, though, when I filmed the last video that just came out, which is about the Russia default, and I do want to talk about that. Futures were down like 0.5%, so they have recovered quite decently since then, and we'll see what happens. If you guys did not see that video, well, here's the scoop. Essentially, Russia defaults on its foreign currency sovereign debt for the first time in essentially a century, meaning essentially like if Russia wanted to pay debt in US dollars, they would have to get those dollars and then pay the debt. Now the ratio of like conversions, like your forex, is going to make that a lot more expensive than Russia just printing more rubles and paying. So that's what they did default on. And if like history were to repeat itself, when Russia gets into bad economic problems, it's usually over war. And that's even, fun fact, why Russia sold the United States Alaska for $7.2 million in 1867, worth today around $111 million, widely known as one of the best, if not the best, real estate transactions for a profit that has ever been made. Imagine that, buying all of Alaska for $111 million. But that's what happens when you fight a war that you financially cannot win. So we'll see if Russia decides to call it quits anytime soon. That's going to be the most bullish thing for the markets that you could possibly imagine. There is not one more bullish thing, I guess, besides Fed Jerome Powell stop raising rates. Other than that, Russia, Ukraine is up here when it comes to the markets. But Alex says, speak for yourself. I love a good seltzer. I'm sure you do, Alex. I'm sure you do. I'm sure all these people do too. We're just gonna lie and say we don't. But win 2 Lambos. Oh man, hopefully soon. We've been buying the dip real heavy. And I do think AMC's in a good spot. I mean, just the data here supports it. And Evergreens, whenever Evergreen shows up, he's going to tell us why we're stupid, just so you guys know, okay? Evergreens is going to tell us we're retarded. But I don't think the notification went out for the live, honestly. It's kind of stupid, but YouTube only gives you 3 notification like boost per day, whereas like if you post, let's say like I did today, 3 videos and a live stream, it's not gonna invite people to the live stream or to your 4th or 5th video. But there was a lot to talk about today. I had to make a video on the Russia Ukraine. Enjoyed my day at Cedar Point. Okay, yeah, first time Russia has defaulted on foreign currency sovereign debt since 1918. That was World War I. Get the fuck out of here, dude. But Cedar Point is a great time. I've honestly only been once, and I live in Michigan, so it's like right around, it's like a jump, skip, and a hop away. It's like a 3-4 hour drive. But it was so hot when I went. It was miserable. Oh my God. I puked and everything. I had heat exhaustion. I couldn't stay up, or I couldn't go to sleep the night before, so I was up the whole night. That didn't help, but it's definitely a blast. I wouldn't go when it's like over 100 though. I would like take a pass on that. But you the best? Oh, you the best, baby. Let's go. I like the positivity and the encouragement. I mean, if you guys are here, that's a good reason to be positive. Most people are not interested in their financial futures. You guys are the select, the few, the proud stock traders. The Marines, shout out to the Marines and the military, letting us do what we are doing now. There's a 10,000 a year cycle that affects all our energy bodies. Okay, I'm very interested in that. I don't know, but we're there. 20 viewers. Where's the likes? You want a like? Sketchy. Okay. I feel you. Tap, tickle, touch, or smash the like button, baby. For the YouTube algorithm, or just to do it. I mean, it's free 99. We appreciate you. Christopher Bates staying up all the way in the UK for these damn live streams. What time is it right now in the UK, man? I feel like you're sleep deprived, bro. And we love you over here. Okay? But yes, you guys are great. You guys are great. Let me know if it sent you guys the notification. YouTube's playing. Yeah, only 22 people. How about a nice Bud Light? I like it. I like it. It's just astronomy. I'm really like actually I'm very interested in the, that kind of stuff, but I just don't know. That's like zodiacs and stuff, right? Astronomy? Astrology? Is that astrology? I don't know. Maybe I'm tripping. It's 0324. 3:24 in the morning. There you go. There you go. Yeah, we should get a Bud Light in here too. But the cost to borrow max, not available. 49.41%. Cost bar average 24.81%. Cost bar minimum 3.14%. Man, Cody, I usually don't. I shouldn't say that. I didn't in the past like believe in that stuff or know about it. But I mean, I'm an Aries, and some of the things that come up, on like your daily message or whatever on certain apps, it's like, wow, that's kind of right on. Any Fed speakers this week? We do have Fed Jerome Powell Tuesday. I don't know why it doesn't come up, or at least I did not see it on the trading economics calendar. Sometimes that can happen if it's like a third party news outlet, which I do believe it's some interview. We'll see if it comes up. Yeah, see, nothing comes up for Tuesday, but Fed Powell does speak on Tuesday. It's not really expected to be anything that will move the markets in a big way, but again, anytime Powell talks, it can move the markets. Really, what is going to be most important coming tomorrow is going to be Nike earnings. That's going to give us a glimpse into the consumer. Like if Nike comes out and just whiffs on earnings, it's going to be like the Target and Walmart situation that happened. Target dropped 25% off their earnings. Walmart dropped like 25% in 2 or 3 days. The days before their earnings, and then the day of their earnings was just the worst day for Walmart since the 80s. And that brought down the whole entire stock market. That was a reason why we had one of those 2 to 3% down days. Nike could be in that same boat. You also do have durable goods orders month over month as well, 7:30 in the morning tomorrow. That's expected to be a high volatility catalyst. Let's take a look actually and see if Nike reports, and honestly, I'm just going to do this like this. Earnings Whisper. If you guys want to keep track of the most important earnings that will affect the markets, Earnings Whisper on Twitter is your way to do it. Each week over the weekend they do post in this pretty little picture that shows us the earnings. But you do have Monday after hours Nike, so that probably won't affect the obviously the morning too much, but that's going to be a big deal Monday heading into Tuesday. And then let's click back on this Tuesday. You don't have too much. Goods, trade balance, retail inventories excluding autos. That actually could be pretty important. Wholesale inventories, S&P Case Shiller Home Price Index year over year. Like nothing too crazy on Tuesday. Wednesday, you do get the PCE. You do get the GDP growth rate for quarter Q1. The final number. Corporate profits, nothing too crazy. Thursday and Friday are the big days, and that's personal income month over month, personal spending month over month, and then on Friday you do have ISM manufacturing data. But I mean, JP Morgan says 7% rally this week. I don't know, man. What does JP Morgan know? So I'm actually hoping, because I'm kind of in agreement with JP Morgan for once, that I do think there's a good reason right here to buy some stocks. Like, when this portfolio rebalancing happens, if you have not heard about this yet and you don't know what this is, portfolio rebalancing is essentially at the end of a month or during the end of a quarter, hedge funds will look at their portfolios. This is all it is. They look at their portfolios and they say, hey, should we be long? Should we be short in this stock? How overvalued is it? How undervalued is it? What is the probability of seeing that market correction? Call it like back to fair value. That's what hedge funds do. And I think it's pretty clear in the case for AMC, for a lot of other stocks we invest in that have taken massive beatings in Q2, that it doesn't make sense to be short on a lot of those stocks anymore. Like, what is the risk to reward profile on AMC right now? What's the probability that AMC drops to $6 or the probability that AMC goes to 16, right? 50% gain, 50% loss. Roughly, I believe $16, $17 will be a 50% gain from here. What is the risk to reward profile? And for most of the stocks we invest in, it doesn't make sense to be short on these stocks. So what is going to happen? What's going to lead into the biggest opportunity? Shout out to you guys, whoever is on the Discord with us, because I think that's going to be, the biggest opportunity is if we get this rally back up to these levels. Maybe we break above the 50-day moving average, come up. Let's see, what have we done in the past? Come up, say 5% above. Yeah, roughly 3 to 5% above the 50-day moving average is what we have done throughout 2022. If we could get that again, 5 to 10%, I mean, I'm not going to hold my breath for this, but that would put the S&P back to about 420, and that's where I think you could get a really good opportunity to buy some puts and make some sweet tendies to the downside. But we'll take a bullish rally too. I'm kind of in the same camp as that. Apparently, the Earth is in many cycles now, like the moon is full or not. I like it. I mean, it's so crazy to imagine, like, light years away and Earth-like planets. Like, man, there's Earth-like planets like 200 light years away. Just trying to imagine something that big is wild to me. It's very interesting. And the aliens are coming. Yeah, man, it's early. Been nice weather lately, so making the most out of barbecue now. There you go. Yeah, it's been really nice. It's been hot. And Lake Mead is like drying up. But besides that, I mean, we're good. Then there's a crazy 10,000 year cycle where the Earth resets. Greatest transfer of wealth. There we go. I mean, I think that's what it would amount to. Imagine that, though, the world like ending and you had a bunch of puts, you just got rich, but it doesn't even matter anymore. Like, man. What's up, Tyler? Let's go, baby. Cheese chaser in the building. There we go. From what I understand, it was the first personal computers on trading floors that caused the crash of 1987, Black Monday. Yeah, that's pretty much what it is. There was other concerns, but what it really boiled down to was the fear in the markets led to the market makers. They did not want to buy any stocks. Like, the people that are supposed to, like your Citadels and Virtues, like, as much as people hate them, and I do as well, what their job is supposed to do is to make sure 20% drops in the markets don't happen. When the market makers don't want to buy stocks when nobody wants to, well, those stocks can fall through the floor. And that's essentially what happened in 1987. Market makers, they just didn't want to buy anymore. You obviously had, our own issues going on. 1987 was not a great year in the stock market. So a lot of different factors caused that, but the biggest thing was really the market makers not wanting to show up to the markets, not wanting to buy stocks. Like, back in the 80s, like, until recently, even 08, like, when that happened, people sold out at the bottom because they didn't think the markets were going to recover. There's a lot more knowledge and education now, so I don't think that would happen. Obviously, market makers, they're not going to not show up one day. But that was wild. I mean, if you were a buyer, it was probably an exciting time. If you were somebody, you weren't a buyer, it was not a fun time. A lot of people were freaking out. I've read a lot of books and documentaries on the 1987 crash, but there was a lot of factors that caused it. But the Federal Reserve ended up stepping in and said they will provide liquidity wherever they need to, and then the markets rebounded. One of the most ferocious rebounds ever, too. Like, right after, they had a stupid green day once the Fed said that. Yeah, very interesting. You should look at who made money during the 1987 crash, because there was a couple people that made like hundreds of millions of dollars, and in the 80s, that's a lot of money. That's like billions now. Who else is holding past 15K? I mean, I think 5 to 10K is more reasonable, depending if we get the right scenarios and the right situation comes about. But I'm not really going to encourage people to hold to any specific price, because it comes down to, like, if you made $1 million, is that not enough? Do you want to stretch it out? Do you want to you know, go down that road, and I think that's everyone's individual choice, you know, to be 100% honest. Why is Lake Mead drying up so fast? It's very unusual. Yeah, I watched a video on it yesterday, and I was tripping out. I told my fiance, I'm like, look at this. Look at this. It's crazy. Yeah, it's drying up, and it supplies water for 40 million people. It's actually a big problem. And I don't know, man. I live in Michigan, and it's been hot. Like this has been a hot summer for sure. And we just started summer 5 days ago. So it's not looking good for Lake Mead. That's a real bad situation, actually. Meet Kevin should have became governor. You guys remember that? You guys remember when Meet Kevin ran for governor? That was a good time. That was a good time, baby. What are we looking at for this weekend? Boxed? Is anyone in Boxed? I guess that's like the new spam ticker. Yeah, like the comments are just Boxed is the next trade. That's it. But Lake Mead, yeah. Shout out to anyone that needs Lake Mead, because, I mean, they're finding bodies. They're finding bodies in barrels in Lake Mead, because the cartel used to use it as like a dumping ground. You can't dump, man. You're going to be exposed if you try to dump anything. You can't even piss off the boat in Lake Mead. It's so small now. It's actually wild. It's actually wild. Weber. Yeah, I've heard people talk about that one too. Boxed. Weber. PSNY. Weber. Ooh, super low volume. Jeez. I mean, it doesn't look half bad, though. It doesn't, I will give you that. Weber does not look terrible. Box. That one's interesting. Started with 16K. Theta Decay. Yeah, Theta is a motherfucker, man. Theta is one of those things where it's like great, but it's not. Like if you sell calls, great. Gores Guggenheim, this is a SPAC, right? PSNY. GG. Okay. Gores Guggenheim Inc. And then you got just Gores Guggenheim. Need advice. I've been in Redbox for the last month. Is that play over? You think AMC is a better play? I had got out of Redbox. Yeah, not at 18. I think the day before it went to 18. I think it was June 10th. So I didn't catch the whole thing. But I mean, it still, believe it or not, you know, has a good underlying trend to it. Just one day. Oh, that's Polestar? Are you serious? Well, I own GGPI. So it must but yeah, the 23rd. So yeah, it must have actually did the merger. But yeah, Redbox. I mean, it's one of those where eventually it's going to go down to like 50 cents because that's the buyout price. Could you eke out a little bit more? Sure, if you bought in earlier and you had profits, then I would get your initial investment back. That's not financial advice. This thing could go crazy. It does have a still a solid uptrend to it. I would just draw the uptrending line if you're worried about it and see, you know, if it breaks trend, that's obviously a bad sign. But eventually it's going to go almost to zero. So especially if you have just shares, that would be a more risky scenario. I don't buy options in anything unless I'm willing to lose 50 or 100%. You know, if I put $500 into a trade like I have before, like the Russia trade that I did, just terrible. I was up on it and then they halted the ETF. So I lost 500 bucks. But I was prepared, worst case scenario, to lose that. So that's the best way to look into it. Like, don't go into a trade unless you're willing to lose 100%. With the shares, though, it's really just bad because they are going to go less than $1 one day. I don't know when that will be, but one day that's going to happen. Evergreens, we missed you. Yeah, Polestar though, I'm definitely down with Polestar. I bought the. I actually wanted to buy an option on Polestar too. Okay, yeah. So now it says that it switch over PSNY. I only have like 300 shares, but I'm excited. The options were expensive though. The options were no joke. Like, no joke. Square. I'm still geeked about Square, too. $2 to 18. That's what Jimmy and AMC did. Their first squeeze. Get over. That was it. Evergreens is so, like, straight to the point. He just says, get over it. You gotta meet Evergreens with hugs. Okay? Just greet him with hugs. Send your love to Evergreens. Check out GBOX, the CEO and the CFO own 99.84% of shares outstanding, and they're still in the middle of a buyback. Massive amounts of it as FTDs like ADX, the free float. Yikes. That's actually, oh, GB. I had it right the first time. Oh, it's cheap too. Holders. Green. Yeah, they do own a lot of the company. 48% of the company is owned by the company. I like it. Buy options with expirations 3 to 6 months out. You won't lose 50 to 100% ever. Yeah, that's how you get around theta a little bit more. Just obviously depends what stock you're going for. But that's the best way to do it. For a while, I only bought Leaps, and I'm still a fan of that right now. A little bit more as of recently, especially after Russia defaulting. I think that could potentially mean we're closer to the end of the war than the start. And in that case, your Leap options are going to pay out pretty damn big because that's going to make CPI go down. That's going to help the markets in a massive way. Then I would feel more comfortable buying the Leaps. And that's probably what I'll do as soon as that news drops is go out and buy some longer dated options. How do you feel about Meta and Nvidia Monday? Well, didn't Facebook do good on Friday? Is it tripping? Is it tripping on me? Won't bring up anything. Is Facebook just messed up or something? It won't bring up the chart. But I mean they're at the lows. Nvidia is. Facebook chart will not come up for some reason, which makes no sense. They're at the lows. It makes sense, portfolio rebalancing, that maybe you shouldn't be short on Nvidia. So it does make sense that I think people will look to buy the stock, and you are at a key support level from earlier in 2021. So if we can hold up at that level, at least on Nvidia around 160, I think that's going to be a good thing. Better yet, call it 165. That's going to be good. But yeah, I know it says Meta Platforms. Oh, did they change it? Oh my gosh. I hate Facebook. I just Oh my gosh. I used to always just type in FB, dude. That's wild. You guys are laughing at me. I don't know. It said Meta Platforms. It's now it's more now on GBOX. The SEC filings just came out last week. 98% of total shares owned by two insiders. I was sending you screenshots on Twitter. Yeah, you can go ahead and do that. I don't disagree. For sure. Yeah, but they're both at the lows. I mean, there's definitely a good trade. Facebook's at like the COVID low. We still love you. Man, I'm so used to FB. So used to it. I think that's actually like one of the worst things that Facebook has done in a long time is change their name to something that's like 5 to 10 years down the line to ever making money. It's actually wild that they did that. But yeah, it's definitely an interesting one, and it's very undervalued. Like let's be 100% honest with each other. As much as we probably don't like Facebook, it is very undervalued. See, does Facebook... See, I could type in FB and Meta comes up on Yahoo Finance. That's bullshit. But PE ratio of less than 12. So, Facebook very undervalued on a book value basis. So, I think eventually Facebook will do better than not, but they're going to be losing a lot of money, and if their growth is peaked out, that's something that can weigh on them even in a bull rally essentially. But 7% on Friday, definitely a good sign. It's actually an interesting prospect just for a longer term trade, just to buy shares on it, or maybe long options. Let's take a look at Meta. I got it this time, guys. Meta. I hate that. Why do they do that? See, options are expensive still. The November 18th 270 call is $140. That's kind of expensive. August 19th. That's not too crazy. August 19th. 230 for 125. Could be a really good day trade too. Hey, did Ted Nugent give you the hat? Wang bang. Nah, good old Wally World. We love him. There was quite a few of them. Different kinds. But this was definitely the best one. This is definitely the best one, for sure. Oh, yeah, what happened to futures? Okay. NASDAQ up 0.5%, S&P up 1/3%, and the Dow up 0.18%. Jeez. Meta is their breadwinner from here on out. The ad business they had going is meh compared to where this is going to take them. $10 billion going to be spent in 2022 on VR, Meta R&D. Meta just had a bull run with 2x the volume, so the contracts cost a lot more. Yeah, that makes sense. Like, I can just look at the options and be like, whew, a little bit pricey. But, you know, Facebook is really undervalued too on a PE, you know, kind of basis. But Meta's just one of those things where it's going to take time. Like, metaverse is not something everyone's going to adapt overnight. So it's going to be years. Reminds me of crypto in 2017. You know, 5 years from now, I think people will be more accustomed and used to metaverse, like putting on goggles and going to work or doing whatever else. The naked cowboy in Times Square wears that hat. I don't know if that's a compliment, but I'll take it. I'll take it. Or if that's true, if that's true, I'm incredibly honored. Well, in July, we find the bottom, then trade sideways 2 to 3 months and rally like a madman. Yeah, I really do think July 27th, when the Fed raises rates, and then the next day we get advanced estimates for Q2 GDP, and that's when we could potentially go into a recession. That's going to be the real test. If we go into a recession as the Fed is raising rates and the markets realize, oh shit, the Fed is raising rates, we're in a recession, we have quantitative tightening, and high inflation, that's a recipe for a damn disaster. That's not a good situation. So I think that's when the markets would hit new lows. Add into there if we're getting earnings around the same time, which are also negative, that's just too much bad news. Like, the Fed raising rates during a recession has only happened twice in history, but we've never had quantitative tightening on top of that. Which is very very interesting to, you know, like what's going to happen during that time. You know, quantitative tightening already is not really a good thing from our, 2017, 2018, 2019 experiences. But right here, during the recession of 1974, the Fed was raising rates during the recession. Towards the end of the recession, though, once we went into a recession, they cut rates initially and then raised rates and then ultimately cut rates all the way down once we ended the recession. During the short recession in 1980, the Fed also raised rates from about 14% to 17.5%, and then ultimately just cut rates right after down to 9%, and then right back up. And this was obviously, we were struggling with inflation during this time. And then once we got to 1981 recession, the Fed cut rates, rose rates a little, and then cut rates down even more. But recent history, it's been since the 80s where the Fed has raised rates during a recession. We're going to go into a full bull run into all-time highs on 75 base point rate hikes completely shared everyone's brains. Dark all stocks to the moon on horrendous news. Yeah, I mean, like a recession, it's obviously not a good thing, but it doesn't have to always be a bad thing. Oh, like markets in general expect, recessions to be bad, recession, depression. People go to the worst case scenario. For one point in fact, recessions create the most millionaires. So if you're looking to grow your net worth and you've been being smart over the last 6 months or even throughout the next 6 months or a year, however long it is, and you start to acquire these assets for discounted valuations, you'll do great. You should welcome a recession to a certain extent, or at least not hope against one. In terms of growing your net worth, obviously recessions are not good for normal people. Hopefully their financial advisor teaches them the right way to maneuver during a recession. But on top of that, you get lower interest rates. So it's like, yes, the economy's in a recession. We should get lower interest rates. If we don't get lower interest rates and inflation just remains too high, that's going to be a big problem. But there's 365 days in a year. 252 days are allowed to be traded, so you get 113 days off work. If you make $400 a day for 252 days a year, you will make $100,000. If you make $1K a day, you'll make $250,000. Yeah. Nothing has triggered. I believe a recession is the only thing they can't stop, which liquidates. Yeah. I mean, it's going to be pretty important in my opinion. You're going to see a lot of hedge fund redemptions. You're going to see a lot of panic, a lot of selling. The markets where they are right now, the margin debt is one of the things that I'm like really concerned with. If we go into a recession, the Fed's raising rates and the markets freak out, bad earnings mix in other things potentially, the margin debt is still very high, and the Nasdaq was down over 30% from its peak. So margin debt has only went down $76 billion, only about 15%, whereas the Nasdaq was down like 32% at the lowest. So if you get a move down another 5 to 10% lower from the lows, you're going to see forced liquidations. It's going to be really bad. And then you could overshoot a lot to the downside, and then probably see a sharper recovery back to a more normal level, and then you'll get that slow and steady rebound. But it's hard to even say when a rebound is going to happen when the Fed is raising rates as aggressively as they are and doing what they're doing. How much longer are you on for? About 10 more minutes, give or take. But K-Pot, we love you. Thank you for jumping in here. Markets anticipate a lot of things, not saying won't fall to its knees. Yeah. That's what the markets are always doing. They're always looking out, trying to figure out what's going to happen next and all kinds of stuff. But, if you can learn that part of markets, how they look at things, how they price things in, then that's where you can make a lot of money on the macro trades. Me personally, I'm a lot better with these macro trades. Sometimes I'm early, but usually never wrong when it comes to macro. Me personally, some people are better with different stuff, but this is pretty easy to see how it's going to play out. It looks like, from what I can see in the real world economy, we're in a recession. Like, Cardi B's talking about a recession. Literally, people like on Facebook, I have seen like memes or like supposed to be like funny statuses thrown around there that we're in a recession. Like, there was one very funny, very, very funny. It said the government is worried about female parts, right? When we're in a recession. And I'm like, oh man, if this is shared like 20,000 times, then we're definitely in a recession. So, you know, that's that. They're always 2 steps ahead. Be smart. Yeah, that's true. 75 basis points isn't bad at all. Why everything acting crazy like a baby? Got no toy. We need a 2.5% rate hike. He said, tear it down. Oh my gosh. Yeah, that's well, from my perspective, the Fed is not going to have any impact on real inflation. Like the Fed will kill demand. They'll put us into a recession, which will help, the price of oil come down, which has been what is happening. Really, all the Fed's trying to do is put us into a recession. They know their interest rate, increases are not going to affect real inflation. It's the recession part that will affect future expectations for commodities, for different things, and that's what really helps the whole inflation problem. Buy stocks that are cheap. If a stock is on discount for 50 to 80%, it's probably oversold. What do you think about Fubo, Evergreens? I think this is like really up your alley. I think if this company on a fundamental basis can actually perform, this thing could be a 30x stock in the future, given its market cap and where its market cap could go, not including dilution. But that's one that, from the peak, call it a short squeeze momentum stock. I don't even know if you want to look at the peak on this thing of $63, but it's down 95%. And fundamentally, it's so undervalued, it's ridiculous. But then again, they have to survive in a high interest rate environment. If they don't go bankrupt, then they'll obviously do well. But that's your main, concern there. But Square, too. Square's one that I really like. I do like PayPal, but I think Square has more upside potential. DraftKings. I do like AMC at these prices for a more fundamental reason. Obviously, it's not just about fundamentals, but I do think it's way oversold. And I do like the way AMC's chart looks in that regard. A lot of other stocks, actually. Like, a lot of stocks are severely oversold, just beaten down too much. SoFi, I think that one's a good one, long term. I do have Lucid, DraftKings, GGPI, well, PSNY now, apparently. Yes, Square is one I've been adding to a lot, though. Snapchat as well, I've been adding to that quite a bit. But those are the ones that I really like right now. Giant spike one day off zero news. Stocks don't need news to move if they're super discounted. Yeah, that's like that's where we're at right now. With most stocks, this is the cheapest the Russell has ever been on a PE basis. Which is kind of wild. And something like Fubo, just, oh my God, it's ridiculous. It's so ridiculous. Market cap, check this out, $545 million. This company brought in $638 million of revenue in 2021. They are projected to do over $1 billion of revenue for full year 2022. That means if we do over $1 billion of revenue, this thing is almost going to be at a half of 1 price to sales ratio. Anything under 1 is considered extremely undervalued, and that's value investor territory. But a half of 1, that's like ultra value investor territory. But even on 2021 revenue numbers, it's still under a 1, which is just wild to me. But in this market, the only thing people care about is profits, so that's it. But I think it'll be good. I do have a lot of faith in Fubo, and I do know people that use Fubo too. So it's not something that I don't know about. A lot of people do have Fubo that I know. Your $2 load call button. Yeah, and the leaps on Fubo are so cheap. They're so cheap. You can get a $5 leap for like 50 cents, I believe. I do have a couple leaps. I've had them for a while. I think they're down like 20 or 30%, but they're 2024s. Looks like their spreads are way off, but a $3 leap for 2024 is $1.88, break even of $4.88. But the spreads are wild on some of them. That's a great question, though. Where did all the abortion issues come from? Honestly, I have no idea. But a lot of people are mad about that. I just think, I mean, you know, do what you want with your body. It doesn't affect me, you know. I think they should be more concerned about the $5 gallon of gas, but, I mean, apparently not. Square, I've been buying a lot of Square too. And I am actually positive I do own 50 shares of Square in this portfolio. I want to get that up to 100 because I also think Square is a potential maximum 30x stock. That would be if the stock went to around $1 trillion over the next 5 to 10 years. I think that's exciting. $5 call can become 2,500. Trust me, I've done it. Yeah, that would be like if the stock went to like $30, for sure. That's definitely possible. If Fubo can just not burn as much money and continue to grow, they're growing at over 100% for the past 2 years, and that's what they're expecting for 2022. If they can come in with those numbers, there's going to be a massive snapback pretty much out of nowhere. You can't trade this cheap if the business is not going bankrupt for too long. If the business is going bankrupt, then sure, that would explain why it's trading like this. But this would look like something that's going bankrupt, given the market cap, given the revenue, especially for full year 2022. I'm chalking it up to they just lose a lot of money still. I mean, $382 million for 2021, about half of what they brought in. So I think that's the key with Fubo. If they could maybe only lose like $150 million for 2022, that's going to be money. That's going to be money. Or even 2023, they're profitable. I believe that's what they're projecting, 2023 profitability. That's going to be good. But, I mean, even if Fubo just grows that revenue base, eventually, you know, turning, you know, a large revenue base into profits, that's going to be really good too. I think it's very hard to lose on something like Fubo, something like Square. I think the risk is very much discounted from the share price, probably way too much. And futures are stupid volatile. NASDAQ up 0.40%, S&P up 0.19%, and the Dow only up 0.10%. Hedgie's in trouble. Yeah, that's exactly what it is too. I like the sign that said, "Keep your laws out of my vagina." Yeah, that's basically it. I mean, it's like, just let people do what they want to do. We are America. Just let them do what they want to do. I get it, all kinds of, you know, religion stuff and all that, but people just need to relax. Let these females do what they want to do. But yeah, they really are though. Just letting stocks be this cheap is a big red flag in my opinion. Like, we get it, liquidity is stretched, interest rates are going up, but in the grand scope of things, to see the market, to see these stocks at these levels of just severely undervalued is like, wow. Like, I wouldn't have seen this coming looking back. None of us thought 2022 was going to be a great year, but like a Square, even on a fundamental basis, I mean, the market cap is $41 billion. It's about a 2 price to sales ratio. Almost 18 billion of earnings in 2021. But with Square, it's such a safe business, longer term, that like, why is it that cheap? You know, a 10x from here would put the company at a $400 billion market cap. Not too unrealistic to see that. Or a 20x would put the company at an $800 billion market cap. You know, it's not too unrealistic given where they're branching out and where the business is likely to go over the next, 5 to 10 years. Why is it so cheap? Probably the hedge funds are in trouble. Okay, what other plays are you in? I don't think I'm into many trades, just besides the long term. Long term, just stock, honestly. Oh, I do have a FedEx 180 put. That was from earnings, down like 86% on it. Closed out Square options, closed out a couple other options, Snapchat, Affirm options. Everything hit really big last week. The Square option, $300 into 900. Affirm was 100 into a couple hundred. DraftKings was good. Snapchat was good. So I kind of just cleared it out before Friday, to be honest. I didn't want to hold too much over the weekend because you never know. And when you got profits, you might as well take them. You can reopen trades on Monday. That's what hedge funds do. And that's why actually Friday was so interesting, because people flooded into the markets towards the close, right? Like, people were buying things like with a fury into the close, and it was a Friday. So that's a really interesting thing to see. People were not that fearful heading into the weekend. Also got to think that mad stocks, the all-time highs, are just going back to pre-COVID levels, if not COVID lows. Yeah, a lot of stocks are at those COVID lows. It's just crazy. At this very moment, Russia could be negotiating contracts to rebuild Ukraine. Yeah, if the war just ends, that's the most bullish thing, because that's going to instantly drive down CPI. The price of oil would probably fall 10 to 20% the day that news is announced. It's going to rocket stocks in a big way. And it's going to put a lot less pressure on the Fed, and that would give us the bottom. If the war in Ukraine ended tomorrow, the bottom is in for 2022, without a doubt. Unless the $5 gallon of gas did that much damage, the bottom would be in, because it would make inflation go down instantly. Like the next inflation report after that, when oil is $70, $80 a barrel, yeah, it's still high, but it's manageable. CPI would fall dramatically. It would fall off a cliff for the most part. Given how much food and energy control CPI, and that would be massive. I mean, just massive. Like, you would want to have calls on that day. That's going to be a 5% positive day in the markets. Is this the best time to load up on stocks, or will it be a new low on GME, AMC, GME, and other good long-term stocks? I think it really does depend on the war in Ukraine. I'm not holding my breath. I didn't even think this shit was going to happen in the first place. So I'm probably wrong, and it will probably last a couple more months. If that happens, then we're in for new lows. You know, coming July 27th, you get the Fed rate hike. July 28th, we go into a recession, which is, it's going to happen. I mean, we're in a recession right now, but we'll know for sure July 28th. And if we do go into that recession, the day after the Fed raise rates, if earnings are bad, which I'm sure earnings are going to be very bad, you know, that's when the markets are going to freak out. They're going to say the Fed is raising rates as we're in a recession. This is a depression. The markets are not coming back for 5, 10, 15 years. That will be the mindset, and you will flush out to new lows for sure. But if the war in Ukraine ends tomorrow or before July 27th or July 28th, about a month from now, then the lows are in. So I'm personally not waiting. Like, I'm not buying on 3% positive days. Like on Friday I didn't buy, and I do think new lows are coming. But if you were not buying this whole year, this would be a moment where I would buy some key stocks like a Square, a DraftKings, PayPal, a Fubo, you know, Snapchat, Yeti, stuff that's like quality. That's what I would do. But what's worse than a recession? And could we get there this year or next year? Well, we could be in a recession right now. I firmly think we are in a recession right now. I've seen signs, for sure that we're in a recession. Could be wrong though. I mean, there's different things like trade balances, you know, trade with other countries that can affect the overall GDP reading. But I do think we're in a recession, and you know, what's worse than a recession would be like a depression, but I don't necessarily think that's going to happen unless you started to see like massive bankruptcies and the Fed had to bail people out. The Fed has to bail people out, then the markets would freak out for sure. But you know, recession, probably already in one. But if the war in Ukraine ended and inflation went down, I don't even think the markets would care too much that we were in a technical recession. They would say, hey, the next 3 to 6 months look very bullish because CPI inflation is going to come down and the Fed won't have to raise rates as aggressive. So I think a lot of it does come down to, you know, inflation and what is affecting inflation, which is Russia, Ukraine, and then how the markets are going to feel about it at that time. Similar to what happened in 2008, 2009. Kind of. I mean, it was not like a technical depression, but it was like a depression, yeah, for the most part, for sure. Like depressions like 1920s, 30s, you know, that time period, and late 20s, early 30s. Said y'all been saying we're in 2008 since 2020. Everything's fine. Rub up that check. I mean, it's a little bit different now. You've definitely seen lending slow down. You know, like I was at the bank, you know, and there was like no wait to talk to somebody for a mortgage, whereas a year ago I was going to get a mortgage and it took 2 weeks to get a call back. Right now, you're getting right in. There's nobody looking to get a mortgage. Real estate's the biggest sector of the economy. Real estate starts to show weakness, then you're definitely in a lot of trouble. And that's what we're seeing right now. But it's all avoidable. I mean, if Russia ends the war, then there might be a small recession, but I don't think the markets would care about it. They would look out and say, hey, we're going to be just fine. Inflation's coming down. The Fed's not going to raise rates as aggressively. Demand will come back. But yeah, I'm going to go ahead and get off here. Thank you guys for tuning in. I am so hungry, actually. I'm going to go eat some Wendy's. Yes. Thank you guys. Enjoy the rest of your day. Hit the like button. Subscribe to the channel on your way out. Get your free stocks down below in the description. If you guys want to come trade with me as we start off a fresh new quarter and second half of the year, link down below in the description. And win Lambo. We didn't see Chris today. I hope he's having a good time. I hope you're having a good time. Two Cheese Chaser, Evergreens, Dan, Damn Yankee, Quiet Quest, Get Away From Me, James, Markham. Yes, get pop. Kill. Yeah. Oh man, that sounds good. I'm just hungry. I think everything would sound good right now. McDonald's, like, I never eat McDonald's, is toxic. But even some McDonald's, some chicken nuggets with honey sound real good right now. Real good. But yeah, thank you guys for tuning in. Enjoy your night, and I will see you tomorrow.